Hello and welcome to the paid weekly recap for the week ending October 17th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the paid predictive AI for dynamic market system. Before we get started, normal disclosures: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. So with that, let's jump into the actual markets. The 10-year yield is now looking very weak. So after some weakness off of the trade war escalation with China, that continued throughout this week, breaching 4% on Thursday and staying right at that 4% level on Friday. 4% has been a key support level. And below that, we've got 3.9 or thereabouts from the lows of the market in April, and 3.6. This weakness in the 10-year yield is driven by concerns over the economy, and that would likely or traditionally lead to weakness in the stock market. However, the S&P has maintained some reasonable levels here. Holding above the 50-day moving average has been providing some key support. It seems to me, as I look at this, that the market may be starting to disconnect a bit from the 10-year yield, and in part maybe because we understand or expect that the Fed can act at this point and lower interest rates. Now, if we start seeing actual fundamental weakness as we get through earnings season, that can get more drastic potentially on the downside. And we've got a big week of earnings. We've got GE, we've got Netflix, Texas Instruments, Tesla, Intel. So we're getting into the heart of some bigger names here that may start to drive the market back to highs or below that 50-day moving average. Now, Friday morning, initially it looked like things may fall drastically. Overnight, we had some serious weakness in the market, but it rebounded and ended up on the day, closing right near that 10 and 20-day moving average, signaling this continued noise and chop within the market. Big down day, recovery, down day, recovery, down day, recovery. This makes it very difficult for many that are looking for directional trades, and actually instead it's very built on a day trader, short-term trading market without a real trend. Tech, very similar, did not quite test the 50-day moving average and did close above both the 10 and 20-day moving averages. So tech is holding up okay. Semiconductors have actually been broadly bullish here in spite of some of these concerns over Chinese trade negotiations and the US government shutdown. So tech holding up strongly. And finally, small caps, which have been in a bit of a bullish trend, pulling back a bit to end the week. And small caps tend to be driven by, sectors such as financials and industrials. And I think that if we start to get more concern over the US economy, those can weaken significantly and create a real concern. But right now, small caps have actually been in a general bullish trend for the better part of 3 months, 2 to 3 months. And in that process, getting a little bit of rotation from that tech heavy focus for the last decade plus into maybe a little bit of small caps for at least a more recent trade. Again, if the economy starts to weaken or we get greater concern over the Chinese trade conversations or the government shutdown duration, perhaps this can actually start to turn bearish, but time will tell. We're waiting on fundamentals right now, which makes technicals a bit more difficult to truly predict here, because the fundamental news, when it comes out, causes drastic movement. And as a result, we had the VIX approach 30 on Friday, by the way. So when we had that overnight fall that looked like things could get really scary and into a falling knife, people started to panic and buy puts. So the VIX got elevated almost to 30, closed around 20 by the end of the day. Does this seem too high? No. On a daily basis, we're getting the move. But over the course of multiple days, we're not. So this is a very much a timing and trading and active trading market in order to get in and out, or subject myself to the potential risk that we catch a trend to the downside or up. And that's the difficulty of the market right now. In addition, with the elevated VIX and all of these earnings, it makes it a little bit tougher to get cheap leverage for the directional trades that we tend to focus on in paid. And as a result, we didn't have any trades this week. Not that very many would have really worked out had we had any on anyway, because of this big chop without a major directional move broadly. Certain stocks, of course, did perform well, but there are fewer that are easier to identify. And as a result, better not to try to get lucky but have a greater confidence in that potential for the upside move. We do have the potential for a trade this week, but it's not certain at this point. So you should be watching your inbox for a potential trade entry on Tuesday morning. But in the meanwhile, make sure you're joining us in the live trading room. The results still continue to be strong as we find opportunities on the short term that may be more built upon higher probability of success trades, credit spreads and things of that nature. Not normally what we're looking for in paid. We're looking for a combination of probability and leverage. Right now, it seems like more of the better trades are really built upon that probability side of things more so than the leverage. But we talk through these circumstances every day through the trading room. Morning bell from 8:15 till 9:15, 9:30 Central, and closing bell from 2 to 3 Central. For those of you on Eastern time, that'd be 9:15 till 10:30 in the morning bell and 3 till 4 on the closing bell. Happy to talk through any ideas that you may have, as well as ideas that will be coming up potentially in the paid system, or just talk through general market thoughts and option market construction and trade, risk management and all of these other phenomena that are important for a trading strategy. So if you can join us, please. If you can't, you can always email us. I'm Keith at yellowtunnel.com, and Vlad is available at Vlad at yellowtunnel.com. Looking forward to another interesting week in this market and hopefully a little bit more clarity coming forward as we start to get through this trade negotiation, government shutdown, and of course, earnings. Thanks again, everyone.